Hi, Tim Bigham for Delta Derivatives Option Hedges and Edges, and waiting for Chairwoman Yellen to speak after the close today. So markets selling off in front of that. We're seeing VIX popping up here, seeing the market challenging kind of those lows from, pseudo Black Monday. So it'll be interesting to see, what happens post Chairwoman Yellen's comments. So I'm actually finding some attractive stocks out here at these levels using out of the money put spreads, given the jump in implied volatilities and the fact that these stocks are, near or at their yearly low. So one name is Alibaba, looking out to November, selling the 50 puts, buying the 47.5 puts, collecting about 50 cents. Stock is down 6 days in a row, less than 50% of what it used to trade at not too long ago, broke 60 meaningfully for the first time yesterday. So looking to be a buyer on further weakness here, positioning about 15% below the current levels. Another name we're looking at, Intersil, using those arbitrator option scanners, identify big and unrelenting kind of call buying. The October 12 calls, we saw big buyers come in last Friday, continuation this week. So selling those and then buying November's and January's, positioning along with that call buying bullishly. Stock last I looked at was about 11.10. Also looking to capture that big implied volatility differential, that term structure volatility, which is simply the difference between the option that we're selling and the one that we're buying. Normally about 5 points, jumped up all the way to 23 with that big call buying. So like that kind of term structure to sell into, and like to position bullishly along with big call buying, as all you viewers know out there. Otherwise, I think it's caution until we get some more clarity here. See if we can hang on to the levels that were set a Monday and a half ago. So be interesting to see if we do challenge that level, what the reaction will be. But another stock, Amgen, biotechs have gotten crucified. Amgen now yielding more than the 10-year treasury at 2.2%. Like it on a chart basis as well. So again, using out of the money put spreads, position on Amgen about 8% below the current levels on a 5-point spread, capturing about 85 cents, net credit here. So I like that combination of stocks that have been beaten down here and implied volatility that has jumped up to really get further out of the money for kind of the same net credit. So the fact the stock's down a lot, I can get either further out of the money to position to be a buyer on a lot more weakness. So until next week, this is Tim Bigham, and as always, but especially in this market environment, keep those position sizes in place. Here's the good trading. Take care.